and first-time jobless claims fell to 215,000, signaling a still healthy job market. Here to break it down, Ted Thatcher, president of Bright Lake Wealth Management. Ted, good to see you. So let's start with the inflation numbers today. They're the highest in 3 years. What are you telling your clients about it?
You know, Alicia, I think investors and consumers, I think the key word here actually is patience. We've seen oil prices drop now 30%, more than 30% from their highs. Last week, they closed, WTI did, below 70, a little bit into the 70s today. But we've seen so much of the inflation in the headline numbers, of course, driven by this energy supply shock going around the world. And fundamentally, that's moving its way through the economy. We've been at this war with Iran for 4 months. I think with what we're seeing today, we're actually seeing a light at the end of the tunnel here. So if we're just patient for a little bit longer, my take here is about 2 months, we'll actually start to see some meaningful progress on these headline inflation numbers.
2 months, okay. Job market looks strong on the surface, but you say there's a major structural shift happening underneath that most people are missing. What's that?
Yeah, you know, at the end of the day, labor is a part of the inflation discussion, and fundamentally, because of everything that's happened in Iran, inflation has been outpacing some of the jobs data in terms of labor cost increases, wage increases. And so as those oil figures drop, as we see the headline inflation numbers come down, I think that'll also be good for consumers. But what I look at when I look under the hood with the consumer, generally speaking, is to not right now get so caught up in these consumer sentiment and consumer confidence numbers. They've been really poor. But when we actually look at consumer behavior, retail spending, personal spending, which we saw again this morning, it's a lot stronger than we expected. And so it's obviously easy to point to some of those more doom and gloom figures. But when we look at the way consumers are behaving, they are stronger and more resilient than we give them credit for sometimes.
Yeah, for sure. Bottom line, Americans are still working, they're still spending, but they are paying more for just about everything. Do you think the Federal Reserve will raise interest rates again before the end of the year because of all this?
You know, coming away from Warsh's first meeting as Fed chair, of course, first time at the helm, I think he quoted that price stability phrase, I believe, more than 15 times. It was really a key theme for Warsh. And so obviously, this is something he's keying on in. In my opinion, his first and primary goal at this first meeting had to be to win the credibility of the markets. I don't believe he had the option, really, of coming out with this super dovish narrative. I think, actually, though, the second meeting we get from Warsh will be more indicative about what rate increases or decreases we get this year. Right now, I believe the rate hike concerns are a little bit more overblown. Obviously, probabilities are certainly higher for that now, but I don't think that we should, count for sure on rate hikes this year.
Okay, Ted Thatcher, president of Bright Lake Wealth Management. Thank you for your insight today, as always.
Thank you.
You got it.